The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman. This is the Wednesday edition. Wednesday, February the 6th. And, February the 6th. That's interesting. Suddenly I realize someone's birthday, February the 6th. Well, of course it's somebody's birthday, but am I forgetting a birthday of someone I should know of? Anyway, here we go. The Dow is down 12 after being down, I'd say down about 40-something in the Dow, quite a bit more in the S&P. Now the S&P is almost unched, minus 0.34. I tell you something, if you do not recognize the pattern that I've been talking about for months, it is the Stork Lake Formation. It is the psychology of buying every single dip that consolidations last no more than a day or maybe 3 days in a bull phase. And I believe we are still in that bull phase. And that was proved by the Dow being down, 130, 150 or something on Monday, and then up yesterday, intraday, about 134 points on the Dow, and then closing up about 95. Well, the pattern that I articulated and the pattern that I've drawn is this oval formation. Blizzard of 78, birthday, 35 years. I remember, thank you, KGS and the Den. I knew there was something about February the 6th. I won't get into the story. Maybe later on I'll tell the story of that incredible day. What a blizzard that was. Anyway, so the Dow is, let me just run the numbers. The Dow is down 14 at 13,955. The S&P is down 1.93 at 1509. Comp index is down, it's about unch at 3170. Gold is up to at 1675. Silver's down 9 cents at 31.7. Platinum is up 19 at 1729. Now, platinum's been acting pretty darn well. There's something about strikes in South Africa. Anyway, I can't get into that because I just barely read that. So I don't want to talk about something I'm not that familiar with. The copper is down 2 at 3.74. Crude oil is down just a little at 96.17. Bonds are up 14.30 seconds. I am watching the bond market, especially the MUB, which are the munis, which are having a nice little balance here. I'm watching this whole thing really closely. Why? Because my belief has been forever that the dollar is being smacked down by the Fed, at least for 3 to 4 administrations. That's been the policy. Remember when Snow gave us that Snow job and he kept saying, we believe in a strong dollar policy, and it just kept going down. And not a single reporter ever questioned him, said, Mr. Snow, here is a chart. I don't know which way you're looking at it, but it seems to me that it's gone from 120 down to, and at that point they could have chosen 90 or 80 or 70. What are you thinking? What are you saying? Anyway, that's the exact opposite of the bond market. And until the Fed really, really gets the evidence, and at that point, just between you and me, I think it's going to be too late. It could take about a year. But when the Fed finally gets the evidence that everything is working, when all the systems say, bam, we are on fire, and the jobless number comes down, that's where this entire market, that's where the world markets become the most vulnerable to a really sharp, elongated decline. But until then, if there is a news event, that news event has to be really strong. In fact, as I said to my subscribers this morning, I can't find it. I'll probably have it somewhere. I said to my subscribers, it starts with a bad news report. And then that filters around to the different areas. It could be Greece, it could be Europe, it could be here, whatever it is. And then suddenly there's a little more evidence that that is actually the case. And then it becomes a snowball building effect. Well, at this particular point, we really don't have much going on in the way of conflagration. Therefore, until those stories come in, until the chart pattern says be careful, I have to say, and we tried it. I tried going short and got a 1.8% loss on one and slightly more on another. Just real tiny, but that was the position I just needed to take in my opening call, because when the Dow goes to a peak D, when it goes to a peak D under certain circumstances, that's what we tend to do, just to protect our portfolio. Well, the portfolio is actually doing really well. And 5 longs seem to be doing pretty darn nicely. So all I can say is that I do not want my subscribers to see a headline saying I'm negative in a big headline banner, when in fact all our positions are long. And the shorts that we had 2 shorts that we tried to use on very, very expensive stocks, like a 2-point loss or something like that, very, very little. And I find that with my technique, if my short positions don't actually work when the technicals are saying that they should be coming down, in fact, buying comes in, I have to respect that. I have to say, you know what? The bias has to be to the upside. All your stocks are to the upside. Why are you looking to short? Well, there are specific cases of shorting, and I want to be there. But in the meantime, what is really, really, really important is the pattern that I'm going to show right now. So the MUB is the iShares S&P National Municipal Bond Fund. In reality, it's held really well. It's having a high-level consolidation. So now let me just go back to my original point. My point was that the Fed has been knocking down the dollar, and they are propping up. They're doing exactly. You know how it's whack-a-mole when the dollar tries to rally? On the upside, it is proper bond. They are pushing the bonds higher. My work says that bonds, theoretically, the TLT, which is at 116.19, should really be at about 111 to 109. So they are propping the bond market up. I'm not going to fight it. I do believe that TBT is a great way to play it, but much of that move in the TBT for now, I think, might be done. We're going to watch it closely. And in the meantime, back at the ranch, I'll be watching this market very closely. Why? Because the pattern that I identified earlier, if it keeps holding, I have to respect it. And that is the oval formation that says we should have a pop to the upside towards that 14,198 all-time high. And at that point, we could start to have a deeper decline after that is done. So it's not very much to go on the upside. And that's where we get peak B in the Dow. If this week 14,019.78 is not taken out in the weekly chart, then we will be making peak B right now, and we will be coming down towards the 13,832 level in the Dow to kind of make that consolidation of the oval pattern. Where does it break down? Where does it suddenly become an arch formation? Remember in my CD introducing the ChapmanWave methodology, we have cup formations. That's very important. And we also have arch formations. And the arch formation right here, let me show you. If you're looking at Tiger 1, is right there. My shows are archived in Tiger 13. Tiger, what did I say, 13? No, it's Tiger 11, because I'm on at 11. Tiger 11. But these particular patterns have been working beautifully in the market. I'm going to be discussing them in much greater detail a week from tonight, 6:30 to 7:30 Eastern Time for my subscribers. Or if you're subscribed, if you've got a trial subscription, we've decided you can. That's the one case that you're allowed certainly to come in. It'll be a pleasure to invite you to come in, but it's already for subscribers. And if you have a 2-week trial subscription, then I invite you. I'd love to have you come in 6:30 to 7:30 Wednesday, the 13th of February. I'll be having a webinar. I'll be discussing the techniques that I'm using, the techniques that you can employ in your own work, how it relates to, some of you have my CD introducing the ChapmanWave methodology, how you can relate to that, and why I'm looking at least 10 small cap stocks that I would like to buy. One we missed this morning by 7 cents. I still like it. I still think it's a good buy. If it can hold around here. I might sacrifice a little bit because it has a bigger target, but I would like very much for you to attend if you're a subscriber. Why? Because it gives me an opportunity to explain my Trader's Corner, why I'm looking at this, what you can use, why when I discuss something, you can do your own analysis and you can enter without looking at my price point, although I'm very strict about my price points. So I think it's going to be a tremendous benefit. It's just going to enlighten you and give you a sense of how... Because I can slide along, I can't do this on a fixed chart I tried it today. It just takes so many charts. I can open it up and say, look, the Dow is breaking above the dashed line inside track resistance for the very first time. If it can hold above 13,950 into Friday, especially if it can get to 14,020 or higher by Friday, doesn't even have to close there, but it just has to get above there. That makes the weekly chart now vulnerable to upside activity as the stochastics at 98%. I want to take the time to explain it and talk it through, why I'm using what's important, how look at that 9-period moving average. Not only that, is a particular, I'm going to show a chart right now. Look at this chart. This chart is the Dow. There's virtually nothing on it. It's just candle. I didn't have to have candlesticks. I had candlesticks just to make it nice and wide. I didn't have to have anything on it. I've got a red line and I got another moving average. And that moving average says there is not a single sign yet of a turn down in the monthly chart. If certain things happen, that'll say, uh-oh, be careful. But as of this very minute, at 20 past 11 Eastern Time, on February the 6th, right at this very second, this particular chart says it absolutely looks like a leg C, and it has a potential, if this is 1 month, that's 2 months, that's 3 months. If there is a lower high bar all of March, then April could see leg D. And that would be the first time that we could be getting very close to some kind of a pretty significant top. But there's also the weekly chart. And the weekly chart of the Dow says, hold it, wait a minute, there we go. Weekly chart says, if we are only in leg B, and we need a full week, at least a week, to make a top, if there's no top, then next week could see a leg C above 14,019.75 if there isn't a higher high this week. So that takes you to leg C. Then you got to get peak C. That takes another week. And then you get leg D. Well, that shortens the whole thing from the monthly. So my suspicion is that we're going to have maybe a week, maybe 2 weeks of a pullback at some time, and it's getting very close to that 2-week consolidation. Then we go to a higher high. And I don't know how long that takes in weeks, but my monthly says April is probably the period that we've got to be looking at right now as making some kind of a top. If we just power through 14,250, that's something else entirely. Hey, I'll be right back at 877-927-6648. Love to take your calls, and we will discuss. See, I've written down. Yeah, I've got some things I've written down. We'll discuss those.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tiger Technicians. Yes, the Dow is almost unchanged. The S&P is up 0.39. Man, I tell you, you want to fight the Stork Lake Formation? Go ahead and fight it. So, I'm going to go straight to John in Philly. Hi, John, how are you?
Hello, Basil. Good day to you, sir.
And a good day to you. You would like to talk about...
Yes, I'd like to ask you about copper on the daily chart, Basil. I've noticed in the past weeks you've highlighted or at least made mention of it. My question is on the ChapmanWave count. Copper is pulling back. Do you have any indication that an important high is forming, or if you expect to see higher highs? That's the question I've got for you, sir.
I expect to see higher highs. That's number one. Straight away to answer your question, the daily chart I'm showing right now has this double cup formation, and it might not do it in that amount of time. If the pullback today wasn't quite so deep, I would have no compulsion but to say I suspect that it's going to go towards the 3.8485 area, and it'll do that by about the 11th of February. At this particular point, I'm going to have to move my limb. I'm going to move it to match the other one. Give me 1 second and I'll tell you where I think it would extend to. Does the trend line extend as well? Yes. Okay. So that says by the 15th of February, copper should be at least trying to test the previous high of the 19th of September. That was at 3.8480. If it's able to break that by even 1 penny, it extends leg C in the weekly chart. Now, there's a pattern that I always talk about it as if I always say I don't particularly like it. It's got nothing to do with like. It's like the cup and handle. Whether I like it or not, it's got nothing to do with the pattern. These patterns unfold. The reason why I don't like one of the patterns, and that is the asymmetric or even the symmetric triangle, especially the symmetric, where the line to the downside is at the same angle as the one to the upside, so they're matching. It's like a wedge on its side. Is that when you finally recognize that it's broken out, which always means to me that it's going to test the left side previous peak of significance, and in this case that would be the peak of that 3.845 area. This is now the March contract, weekly contract. It's a little late, so I'm not complaining about it. I'm just saying that, yeah, it works, but by the time it works, you should have other technical indicators that are giving you the pattern so that you're in the trend. That's number one. Number two is copper will fail if it actually closes underneath 3.595, and that could be any time in the next 3 to 4 weeks. More importantly, if I can go to my continuous contract, CL.P, my continuous contract, that is... Why is that not showing that? Oh no, I have to redo this one as well. All right, well, no, CL is crude oil. Sorry, that was copper. Did I just go to CL? I must go to copper, which is HG. I'm sorry. We're going to do that again. You must be wondering what? Oh, that's funny. The price. I've got it. Okay, so that's fine. What I'm looking at is HG in the continuous contract. There it is. So now the continuous contract that I'd shown a little while back has this pattern. It's got a series of rising highs and it had a series of rising highs and rising lows, but then it suddenly came to a decline down to the 3.09 level back in October of 2011, and it's kind of been stuck in a trading range. And that trading range says there's a pattern that I look at in my CD introducing the ChapmanWave methodology. I talk about this pattern a lot. It is where you get an H formation that turns into a continuous M. What happens is, if it takes out the previous, without taking out the low, which it hasn't done because it's making rising highs and lower lows, if it takes out the 3.847 area, which was the high in September of 2012, all of a sudden, immediately, the 4.02 high of February of 2012 becomes a target. So that's why I'm saying if it breaks down, goes to the 3.5s, then it's just stuck in this trading range. I see nothing very strong. What's really important, that is, if it goes into 3.80s, I'm pretty sure, I can't guarantee it, but I'm pretty sure that the MACD for the first time, it's just now 0.01.0. It is 0.02. It is so close to turning up the fast-moving average above the slow-moving average that I have to give the weight of evidence right now to say that on balance volume is strong. The stochastic is not that great, but it is rising. So my bias is to say that copper is going to go a little higher. But I actually also want you got a moment there?
I do, thank you.
Because I'd like to look at the JCC, which is the AIG Copper Trust. So I'll be back with John in Philly. We'll be back with John in Philly and Stacy in Denver straight after this break. Dow is -5, S&P's up a tad. Nice action considering what's been going on. I'll be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back with Johnny and Philly, of course, and we're talking about copper, high-grade copper. In this case, I'm also looking at the iPath Dow Jones AIG Copper Trust, trading at 47.20, down 42 cents. And in this particular instance, I must say I have the same kind of thing. I believe that there's a bias, a choppy bias to the upside, but the bias to the upside says that the AIG would go towards the 48.82 high of the 5th of October, but more likely it's at 47.20 right now. I'd really be looking at 48.20, and if it can go higher than that, that's good. So I see an upside bias before it starts to have a little digestion, which it does periodically, again, the cup formation. But most importantly, the weekly chart has had a very quick, from a doji low of in the 16th of November at 43.23. It's gone quickly to A, to B, to C. So if there is no new high, 47.80, 47, it missed by 2 pennies, making a new recovery high. If there's no recovery high this week, then I suspect that the JJC is going to pull back a little bit. 46.45 is very strong support. I think it's 46.70 is probably where it'll go. And then I see it going higher. But the most important hurdle that it has to overcome is the 48.82. Now, you like to go into the actual materials themselves. So if you're looking at the the March copper, I would see how it holds the 9-period exponential moving average right at about 3.73. It's at 3.74 right now. If it's able to climb and get back to 3.747, anywhere around this 0.75, my suspicion is that the consolidation has been done and it's going to try to make leg D above 3.7925. So that's the very short term. Looking out, what I suspect is that slowly it's going to work its way towards the 3.848 area, and if it takes that out, then you've got a lot of open room on the $3.90 to $4 area in the weekly. I want to see copper at $4 by, I'd say, this is February, sometime late March, early April. So I hope that goes with your analysis, John.
Yes, Basil. Thanks for sharing the conclusion and what's behind it. I have one last thing. You've got other callers. Don't want to monopolize your time, but I did want to present a question. I noticed, being a student of yours over the years, I see you apply what you call a left side, right side price time match technique.
Correct.
And I will tell you, in looking at how you do that closely, I have, at least in my own mind, haven't been able to figure out how you do that. I come away concluding it seems arbitrary to me. If at some point you could explain how you do that, that would be very helpful.
Well, I do spend a lot of time on that particular aspect in my Master Trader series. One of the reasons being, I don't want to just glibly say, oh, this is the bar. There is a very specific midpoint that I look for. If that midpoint isn't there, then there's a specific candle at a specific place that I look for. And if you actually go back and you look at my left side, right side price time match, you'll find that it almost always coincides with either what turns out eventually to be the exact low or high of the left side, say 20 periods to the left to 20 periods to the right, going back to the previous high or low if it's an arch or a cup. If it's not that, then it'll be a very specific candle. So that's a great observation, but there is just once in a while there's an artistic side to it. But there's another technique that I use. You know, I always talk about the inside wedge. Let me show the chart right here. In the chart that I'm showing right now, there's a thing that I call the ChapmanWave inside wedge. That also is extremely helpful in giving me the direction to the price time point match. I call it the inside wedge target line, and that's on my CD introducing the ChapmanWave methodology. So, hey, great observation, John. Thank you so much.
Thanks, Basil.
Thank you. Let's go to Stacy in Denver. Hi, Stacy. How are you?
I'm good. How are you doing, Basil?
I'm doing very well. Thank you. You would like to talk about my nemesis. We can laugh about it because it hasn't cost us any money. But this is Boston Scientific, folks. BSX. I pinpointed this thing. We once had a really fabulous trade, and then I said, I'm not touching it again. And I was on air when it made its all-time high because I had someone that I just met at a course that my wife and I were taking, and he and his wife were taking, and we met, and he was working for Boston Scientific at the time, and I said, I think I've got something that I call a peak D in the monthly chart, and if it breaks underneath the 9-period moving average, he didn't know what I was talking about, although he's a scientist, he would have if I explained it to him, but I said if it breaks under, it was pre-split, so it wasn't at that time 31.25, I think it was 64.50 because it was split 2 for 1. I said if it breaks under that, I've got a peak D, and this thing's going down. Well, folks, it went from 46.10, which is actually $92. It might even been a 3 for 1, and it came down to $4.97. Well, I had said that this is a stock that I think has finally got its act together. They did if you want a textbook case for a Harvard Business School course on what to do wrong, Qualcomm is probably the stock in 2000, and Boston Scientific is probably the stock since then, because they bought the wrong companies. They had problems with their stents. They did every single thing wrong. And then they had lawsuits from the company. But I identified this as a potential long. We did get long at some point. Oh, we lost 9 cents when I got it at $5.64 on the 11th of December. I tried to get back in, never got back in, and it's trading today at $7.63. Straight line move, the 9-period moving average. They've got a new CEO. You know, it's terrible to hear about cutbacks, but they're cutting back 1,300 people right here in Massachusetts. But I have to tell you, a firm needs to stay in business. I don't know if the post office is about to stop delivery on a Saturday. Are they going to still pay everybody? I don't understand. How's that going to work? What, is their monthly salary going to be the same for not working those 4 days?
No,
how is that going to work? So anyway, this...
Hourly.
Right. Maybe they work earlier. No, I think some people work full time. Anyway, that's their business. What I'm looking at here is, do you have Boston Scientific? Did you buy it?
I have about 300 free shares. I already made a trade and made a profit, and I got out the day they announced their last income, and that was the day they gapped up.
Right. That was on the
get back in.
That was on the 29th, right. But they also mentioned the layoffs on that day. So, okay, so now let's look at this. This is still a stock. Well, it's actually hit my target, which the target was the 200% moving average, 200 EMA moving average of the weekly chart. You know, when that happens, you just sit around and you say to yourself, hey, great analysis, lousy implementation. You, on the other hand, had fabulous, you really got this beautifully. So now... You've got 300 left, you say?
Yeah.
Okay.
They're free shares.
Can I talk to you about that? Because first of all, I want to congratulate you. You stuck with it. You were fortunate in that it never had a pullback, so you didn't even have to make a decision. Even if you had a trading stop, the stop wouldn't have been even close to have been hit. But that 7.36 9-period exponential moving average and the 717 level, the next moving average support, and the 660 area, I think that's going to be hit at sometime soon. No, I shouldn't say sometime soon. I would say sometime in the next 3 to 6 weeks. That's what I'm thinking. So it's on my list. It's done everything. Look, it has not been even close to the 200-period moving average since it broke down back in May of 2005. Finally, it gets there, and it breaks a little bit above it, and it's in leg peak C in the daily. I think it's going to go to D at 772. 773 will be D. This is what I'm going to recommend to you. The 300 shares that you have, it's part of a package of your own portfolio and everything. You're going to just say to yourself, you know what, it's going to 7, could even go to 780. But at some point, it's going to give back a point to a point and a half, maybe even 2 points. But there's a chance, because it's now become a focal point for folks who are saying, wow, they might be turning around. I would not be surprised if it's a bumpy ride down. It's not a straight down move, and that it's a bumpy ride down. And if it's a bumpy ride down, it says to me, institutions, now that it's over $5, are beginning to look at the stock. So on the one hand, I want to say to you, I'm not going to put words in your mouth because you've called me about it. But basically what I want to say to you is, I think that your core position, your free position, because of the way you've handled this trade, I'm saying to you, if you can, try to keep it, even though you know that you're going to give back. So there's another way to do it. You can just say, hey, 300 free shares at $3.70, what did I say, leg D, at $3.73, I'm taking my money, and I'll just try to get back in. At any lower price means that I'm a winner because I took it at the high, and if it comes down, I'm in. But it's kind of difficult. I don't have to tell you. That's difficult to do. I don't have to tell you because I missed it each time I wanted to get it.
Yeah, exactly.
But you understand what I'm saying? I think it's in play. And the monthly chart has a high of $7.96. It's almost there. Whenever a stock that has had a 200-period moving average out of sight, didn't even look at it, and suddenly it comes into focus and goes above it, my rule of thumb is it might go above it, but that's now a magnet for it to come back, go under, be a magnet to come back, and then maybe one more pullback to scare everybody, and then it goes back above the 200-period moving average. It's established it as an icebreaker, cuts through the ice, and that's exactly what I think. So I would, on the one hand, I want to say, you think it through, but I would like to say to you, keep your free shares. It's just fantastic to have the free shares. It's not fantastic to give back 2 points and say, wow. So you might even want to split and just say, you know what, if it gets to $7.73, I'm taking off 100 and I'm not touching the 200. They're just going to sit there. Then the 100, you can be specific and say, I'm going to put the 100 back at $7.36. That's already almost 50 cents better than it was. And then the other entry point, I will look to see if the gap at $7.05 from the 29th to the low of the previous day, $6.92, if that's going to be filled. And my suspicion is it will be filled. And at that point, we're looking at fresh money starting to come into Boston Scientific, BSX, trading at $7.63, down 5 cents, and it's looking at me and it's going, where? Never make it personal. You'll hear Larry Pesavento will come on this now, and he'll say, never make it personal. But it is personal.
Well, that's at that same point, and if it does come back in a lower volume to that gap, fills the gap, and as you say, fresh money can come in. And
I think that's the way I'm looking at it. I think that they've turned the corner, but I'm not calling it the new buy me stock. I'm just saying it's turned the corner, and I think it's going to the monthly has all the way up at $12.31. I don't want to get carried away. All I'm going to say is that I suspect if it pulls back to the mid-sixes, there could be another run towards 850, maybe 930. And, hey, that's a real nice percentage move. And you know why I'm liking it? Because what I say to subscribers all the time is I think it's a safe stock because all the bad news, I mean, textbook case of doing everything wrong. Now I think they've turned the corner, and I like that. And the chart certainly proved it. So congratulations. You've had a really nice trade. My only suggestion here is that the best possibility I can see is if it does go above the high of yesterday, and it doesn't do it today, but it does it tomorrow, you can even put a trading stop at maybe 100 you take off, and you say, hey, that's great, but that 100 becomes, you set it aside and you say, I'm dedicating that 100. You can even put it in the moment you sell to buy it back, and you can buy it back at 736, 717. You just put it in and see if it hits. So that's just one way to play it. But hey, nice trade. I'm so pleased. There are a couple of subscribers actually have written me to say, we took your advice and we've just stayed in the stock. But you know what? I'm very strict about my rules. We missed it, I think, once by about a few cents, and that's the way it goes. So congratulations, Stacey, and thank you so much for calling.
My pleasure. Oh, if you do have any time, can you look at Invivo? INVIVO, but the ticker is NVIV. IV. Okay. NVIV. Got it. Correct.
Envivo. Oh, it's at $2. So this is a bulletin board stock. This is $1. Is this trading at $2.0200?
Yes, it is.
Okay.
It is.
Yeah, there are a couple of stocks that I've been looking at that are basically, we call them pink slip stocks, OTCBB.
Right.
So this is not for the faint of heart, but only reason being, it's the kind of stock that you want to have money just sitting around there saying, you know what, I like the stock, I like the technicals, and I'm going to buy it because I know that it's hard to get out, and I must have a specific price to put. Hold on, and I do not have a call after you, so hold on, and we'll look at NVIV, Invivo Therapeutics Holdings, trading at 2.0200. Be careful of these stocks, folks, unless you know about them. I'll be right back. 877-927-6648.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Great moments are born from great opportunity, and that's what you have here. The opportunity to answer the questions, should I buy or should I sell? Should I be in or should I be out? Hi, I'm Steve Rhodes with TFNN, and I produced a free report, Reading the Message of the Markets, where I'll teach you how to use a set of tools that will answer these questions. Go to the homepage of TFNN.com right now and download Reading the Message of the Markets. This free special report includes step-by-step video examples that would have had you out of the market before the crash of 1929, before the crash of 1987, and would have had you back in the markets buying at the bottoms. This set of tools works on all time frames and all instruments. This set of tools will shape your trading and investing future. Folks, this moment will never be here again. The only cost is not taking action. You were born to be a money master, and the time is now. Go to the homepage of TFNN.com and order Reading the Message of the Markets.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We are on right now, and the Dow is minus 8, S&P is minus 0.84. Nice action considering what's going on, and you've got some stupendous moves. CMG is up 19 to 324. What happened to Panera? Did it disappear here? Panera. Let's just see what Panera is doing. PNRA. Panera was up 6. That's up 2. Okay. So we are on with Stacy in Denver, and we're looking at NVIV. Now, folks, when I say that this is a bulletin board stock, this is a stock that trades with four with 4 digits after the decimal point. So it goes 2.0200. So the problem with stocks like this is very often, not very often, it is always real easy to get trading right now, 53,000 for the day. You could put in to buy 10,000, it's at 2.1294. You could say, I want to buy 10,000 at 2.1293. And within a split second, you'll see it go in there, and you'll be it'll be bought. If you put in to sell at 2.1295, just 0.001 higher, you might sit the whole day, even though it could even trade higher than that. I don't know how it works, but that's what happens with these. You can't get out very quickly. So in a stock like this, it's sitting on the 9-period moving, 200-period moving average of 1.9. Is that a 1.9662 is the low that you got to watch out for. And at the same time, what I would do is, are you in this at all, or are you just looking at it?
I'm in, but I'm in about $0.50 lower, actually.
Okay, because what I wanted to say to you is, there is a risk in this particular stock because of the rhythm of its big swoops to the upside and its pullbacks, that the pullback lasts a little longer, even though I've got it at peak C in the weekly, that the pullback actually lasts a little longer. So my big thing here is that you've got to watch the 1.95 support. If it takes that out and it's 1.94, I'm going to suggest you take just like 100 of those shares and you just say, whatever the price is, say, sell 100 at whatever that is. Right. And if you get it in a split second, then you can feel much safer that you can get out of the stock when you want to. But if you just sit there for an hour, hour and a half, nothing happens, then your original position, I think I've spoken about this before. A long time ago, I had one of these things. It did fantastic. I watched this. I was so proud. It was just I got it at like 1.36 or whatever. It doesn't matter. And it was up at 3 or 4. I don't know what it was. And I thought, fabulous. Now I'm going to sell. And every day I'd put my sell in. And you know, I could never get out of the darn stock. When I finally got, I don't remember if I made money or whatever it is, I never got in. I never got out at the price that I wanted, which was my perfect peak D. Everything was set. I could not get out. Even though I even put the price down a little bit lower, what they did is then they made the bid offer lower. I don't know how they did it. And I don't know who the they is. Now, so maybe it was not because it was not as electronically connected as it is today. But whatever it is, I'm just warning people, you've got to be careful. So I'm going to say to you, you need to see $2.18, and it needs to be within the next few days. Because this pattern, yes, is be careful, because if it starts to break down below 1.9, if it breaks down below 1.95, it could quite easily go into the candle of 1.72 on the 4th of January. So this is not as bullish as the other one we were looking at. So thanks so much for calling, Stacy.
Thank you, Basil. You have a great day.
Thank you for calling. Good. So, folks, let me just go through this again. Just have a little drink before. Larry Pesavento coming up. Program all day. Fantastic program. Don't forget, I've got a free webinar coming up. There it is, right there. Basil Chapman is conducting a free subscriber-only webinar a week from tonight. If you sign up, you can get my 2 weeks free. That allows you to go to this webinar and explain the way to use the ChapmanWave methodology, incorporating into my particular picks, why I look at them, what I'm looking at them, why I'm looking at the weekly and the monthly charts, and why I have a whole bunch of small cap stocks that I'd like to buy and where I'd like to buy them. So have a great day. I'll be back tomorrow.